Thank you for joining us today for our webinar on credit scores. My name is Josh Antis, and I'm in the Community Relations Department here at California Coast Credit Union. It's great to have you here with us today. Before we get started, just a few things I want to mention. Everyone will be placed on mute for the duration of today's presentation. However, if you do have any questions, please feel free to ask those in the question and answer box or in the chat box, and we will be sure to answer those either as we go or at the end of Tara Lynn's presentation today. We also are recording this session, so if you do want to go back and catch anything you might have missed, or if you happen to join us late or happen to have to leave early, anything like that, we will have a recording of this session on our YouTube channel, so feel free to check it out there. I'll put the link in the chat a little bit later so you have that ready to go. We also have some things I want to mention. One thing is our financial wellness portal. It's powered by Enrich, and it's a portal that's completely free for you as a member. You can go and check out videos, articles, tools, courses, even games, all kinds of great things on any number of financial topics, not just credit scores, but budgeting, managing debt, retirement, whatever is on your mind. There's thousands and thousands of resources right there at your fingertips. So please go check that out. I will post that link for you in the chat as well. And then before I kick it over to Tara Lynn, just want to mention that if you are a member, we do have a referral program right now where if you refer anybody and they become a member, you get $50 and they get $50. Or if you're not a member yet, you can sign up for a new account and you get $50 as well. So keep that in mind for this holiday season. I know we could all use a little bit extra cash. So it's easy, it's free. You don't have to do anything except put $25 in an account. You can pull it right back out if you want. So, all right. So let's move on to our speaker today. We have Tara Lynn Rose, who is our financial fitness coaching department manager. Sorry, I made that a mouthful. She's been with the credit union for quite some time now and does a lot of these presentations for us. Some of you may have seen her in previous webinars, but she's amazing. So I'll kick it over to Tara Lynn and we'll get started.
Thank you so much, Josh. This is one of my favorite webinars because credit is such a mystery to so many people. People keep getting all this information from everybody and they're told, oh, you should have 5 credit cards, you should have no credit cards, or you should never have a balance on your credit cards, you should always carry a balance on your credit cards. It's like, who do we believe? What do we know? And what do we do about this credit score? So today we're going to take the mystery out of it and you're going to know exactly what is going on with your credit score so you can get to a higher level. I tell people all the time, I feel like this is the best game that you can play because when you get to a higher level, it actually does something for you. You actually get better interest rates, you're going to save money. It's actually going to do something for you. So we're going to talk today about credit scores and what affects the score, what we're looking at, doing some tips and tricks that can get you to a better level, how to manage that credit score so we can keep it at that high number. We're going to start off with just finding out exactly what that definition of a credit score means. We have this wonderful, a credit score is a statistically derived numeric expression of a person's credit worthiness that is used by lenders to determine the likelihood that a person will repay his or her debts. That is a really long sentence. And really what a credit score is for us lenders to determine our credit risk. You've handled all these debts in the past and all these credit bureaus put it on a nice, neat report. They sell it back to us. And we apply this scoring system onto that history to determine our risk, right? What is the risk that if I loan money to you, I'm going to get it back? That's the whole point of the scoring system. It's not for you. It impacts you a lot, but it's not for you. It's for us as lenders. So it's all about our risk. Are we going to get that money back if we borrow it, if you loan it to you? So we're going to start off with this quick question, a quick pop quiz. I know, happy Wednesday. The main credit bureau that lenders use is Vantage Score. Is that true or is that false? Pop it into the chat.
Carolyn, are you moving your slides?
I am. Are you not seeing it?
There it goes. There it goes.
Oh, let's try that again then. I was on the wrong screen. Go Zoom. Thank you. Okay, so in the chat, is it true or false? The main credit bureau that lenders use is Vantage Score. True or false? Type it in there. And if you don't know the answer, go ahead and look in the chat because everybody's got it right. That is false. A Vantage Score is a scoring system that is out there. So if anybody has Credit Karma, it's a great resource. It gives you two of the main three credit bureaus or actual credit reports, and it does give you a score, but they're using Vantage Score, which is, it's a system that these three main credit bureaus came up with to give you an estimate of where you're at. They use different data. Most of us in the credit lending departments use the FICO score. So when we go over the FICO score, that is what we're going to be using, is the FICO scoring system. So I like Vantage Score because you get to Credit Karma, you get an update every single day based on that information on the reports, but it's not the scoring system that most lenders use. So just be aware of that we do have the Vantage Score out there. You might see that on all of those free things that you get from most of those credit card companies. They're usually using the Vantage Score because it's free for them to use. So we're going to talk about the three main credit bureaus. We have Equifax, TransUnion, and Experian. These are the three main companies that compile all this information together and put it on a nice, neat report, and they sell it back to us as lenders. So we have to buy one of these reports to determine how you've handled those debts in the past. Now, we as lenders also report our information to these credit bureaus. We are not required by law to report to any of them, let alone all three. So you might see information on one credit report that's not showing up on another. So you might have different scores on different reports because we have different information. I had one where the lady had student loans for 15 years that was only getting reported to TransUnion and Experian. So her Equifax score was a lot lower. It didn't show that 15 years worth of history. So you want to make sure that you're looking at all three credit reports so that you know what's on all three of those credit reports, because all of those might go into a lending decision because you don't know which report is being pulled. If you apply at California Coast Credit Union, we use the Experian report. So we really don't care what's on TransUnion or Equifax. But if you apply for a mortgage, most mortgage lenders are going to pull all three because we know that not everybody's reporting to all three. And before we give you $500,000, I want to make sure I know and get the biggest picture of how you're handling all of your debts. Okay. So next thing we're going to talk about is, where does that information come from on those credit reports? So you will borrow money from banks, from credit unions, from car companies. You might go to like Walmart or all of those kinds of places that you borrow and apply. Kohl's might do it. Nordstrom's has their own credit line. You go in Best Buy, they will offer you a credit card. So all these companies will loan money to you, and then they'll take that information and report it. If they report it, most do, will report it to the credit bureau. So that's where the information comes from. You're also going to see addresses, names that you've used on applications. You're going to see phone numbers that you've used in the past. You're going to see if you had any bankruptcies or judgments or liens against you. That does get reported to the credit bureaus. And if you have any collections, so if you didn't pay somebody, they will typically report that to the credit bureaus as well. So they're getting all this information, put it on a nice, neat report, and they sell it back to us as lenders. Okay. So here's a quick question. Here's another pop quiz. Too many addresses on my credit report will drop my score. Is that true, or is this false? This is one of those things that I get all the time. We have this misinformation that people aren't aware. Too many addresses is going to affect my credit score. True or false? We got some conflicting answers in there. And again, this is that conundrum. Who do I believe? What do I know? So I'm going to answer it right now. No, too many addresses does not impact your score. However, when lenders are looking at your application, we are going to see that information. Where have you lived? Anytime you've applied for something, that address and phone number and employer is going to show up on that credit bureau. So if I see 20 different addresses in the past 5 years, it does kind of affect stability a little bit. So it's not going to impact the credit score, but you might have someone asking questions as a lender, what's going on with the moving? What kind of a job do you have? So it might impact a lending decision, potentially a little bit, which not a lot if everything else is looking good, because let me tell you, I've moved every year for the past 20 years. There's a lot of addresses on my credit report. Thank goodness addresses do not affect the credit score. Okay, so next thing we're going to talk about is why does it matter to you to have a good credit score? So I have on here John and Jane. John has a credit score of 620. He's had a couple of dings. Jane's been doing really, really well, and she's got a 750 credit score, which is what the minimum that you need to get the best rates is 750. Interest rate, John gets 9.88% because he's a higher risk. He's had a couple of dings, and we want to charge him a little bit more in case he decides not to pay us back. Jane's getting 3.88% for the exact same loan. So you can see the difference in the monthly payment. So having a low credit score is costing John quite a lot of money. And Jane's going to save $2,500 because she's got a better credit score. Now, I don't know about you, but I can think of a lot better things to spend $2,500 on than interest because I have a bad credit score. So we're going to talk about what is going to impact that credit score. And we're going to talk about the FICO score specifically because this is the one that most lenders are using. It's the big FICO-Fair Corporation. That's what that stands for. It's the company that came up with this scoring system. It's been around for a really long time, and it is what we use. However, what people don't know is that within the FICO scoring system, there are different models as well, like having a 2010 Toyota Camry versus a 2021 Toyota Camry. It's the same model, does the same thing. Main job is transportation, point A to point B, but the newer one has heated seats and a GPS, right? Doesn't really change the function of the car. It's nice to have. The same thing within FICO. They come out with new models and new ways of calculating. We as lenders have to buy the new model, just like you buy a new car. So if we are using an older model and we're making good lending decisions and we're not taking losses, that's the whole point of the scoring system. So why would we want to shell the money out to buy the new model if we're doing okay with the old one, right? So there's the FICO 2, there's a FICO 8, the FICO 9 came out in 2014. California Coast Credit Union bought it in 2019, 5 years after it came out. There's a new model that came out last year, the FICO 10. Now, we just bought the FICO 9, so they're probably not going to buy the newer one anytime soon. But I want you to be aware that that's a question you want to ask a lender when you go apply for a loan. One, which credit report are you using? TransUnion, Equifax, or Experian? Two, which scoring system are you using? Usually it's FICO. And then three, which model within that FICO system are you using? FICO 8, FICO 9, or FICO 10? Those are the three main ones that are being used. So all of those are going to give you some different information and different scores. And so you really have to understand what's on all three credit bureaus and understand what's going on with the scoring systems and the models. So the FICO 9 is the one that's probably going to be used most often nowadays. Again, it came out 2014. Most of us have upgraded to the newer model. And it's really more beneficial for you as a consumer because it has to do with medical collections and collection accounts and some other payments that may help you. So medical collections, if you have any medical collections, maybe there was a copay that didn't get to your insurance and it didn't get paid and it's showing up on your credit report, it's actually not going to hurt your score as much if you have a medical collection as any other type of third-party collection, because what we found is people who had these medical collections were still paying their car loans, still paying their credit cards. So having a medical collection wasn't as big of an indicator of our credit risk as other third-party collection accounts. So they don't hurt your score as much with the FICO 9. Now, another good thing for consumers, if you have open collection accounts on your credit report, with the FICO 8 or older model, if you paid that collection account, it's going to take 2 full years before that stops impacting your score. You start healing from it, but it's 2 full years. So a lot of people were like, it's going to fall off my credit report in a few years anyways, I'm not going to pay it. Well, with the new FICO 9, if you pay a collection account, it stops hurting your score as soon as it's reported as paid. So that helps the consumers. That's going to help their credit score. If they want to buy a house next year, it can stop hurting their score right away. It also helps us as lenders because we're recovering more of the money that we've lost. So it's kind of a win-win for everybody. The third one is rental payments. If you have a rent payment and if your landlord reports it to the credit bureaus and if the lender is using the FICO 9, this rental payment history can impact the credit. Now, I've been doing this for a really long time. I've seen it maybe twice where the landlords are reporting their rent to the credit bureaus, and we've used the FICO-9, so it's not really helping a lot of people yet. But if your landlord reports, and if we've got the FICO-9, that rental payment can actually help that payment history, which is the most important part of your credit score. So those are the main differences. FICO-10, just so you guys know, that's coming out. It's out, but we have to buy it, so probably don't worry about it too soon. But the main difference with the FICO-10 is if you do a debt consolidation and you pay off all of your credit cards, so you just have this one payment, that's great. You know, it's probably going to see an increase in your credit score because you no longer have that balance on your credit cards. However, with a FICO-10, if you start using those credit cards again, so, oh, I've got this $5,000 available, I'll just charge $100, not that big of a deal. And then you do that on all the credit cards, you start having balances on those credit cards again after a debt consolidation, it's actually going to be a harder hit on your credit score. Because what we see with it, we see those balances, that's a red flag for us as lenders, and we'll go into that a little bit. So with a debt consolidation, you don't want to use those credit cards again, especially if they're using the FICO-10, because it will hurt your score. Okay, now we're getting into the heart of credit and understanding what's going on with that credit score. We're going to go over each of these in detail. So 35% of that score is based on payment history, 30% balances that you owe, 15% is length of credit history, 10% new credit, 10% is a variety of factors. So we're going to go in and talk about each one of these. And I'm going to start with the most important one, which is payment history. This is 35%. It's the most important part of your credit score. And this is, do you make your payment on time? Yes or no? It's super black and white here. So you're not getting more points in this category for making more than the minimum payment. You're not getting more points for making 5 payments in a month. You're not getting more points for having a bigger minimum payment. So I could have a $500 minimum and a $25 minimum. We don't care. All it's, did you make your payment on time based on the contract that you signed with that lender? If you paid your minimum payment, you get a green check mark, and that you move on to the next month. That's all we care about. Now, if you're late, and we're not talking 10 days late, 15 days late, you might pay a fee to the lender, but you're not going to get reported until you're 30 days past due. And it's 30-day increments. So 30 days, it gets reported. 60 days, it gets reported. 90 days, it gets reported. So if you have a 700 credit score, that's still pretty good. 850 is the top score. 750 and above, you're the A++ platinum. Everybody loves that credit score. That's what your goal is. But 700 is still pretty good. You have one payment reported as 30 days past due, you lose 40 points in your credit score. It's going to take 2 years of regular on-time payments to get those points back, and it will stay on your report for 7 full years. So people who say that one late payment is not a big deal, anybody who's 18, 19, 20, don't be late, because it is a big deal to us as lenders. Because the whole point of the scoring system, right, is if I loan money to you, am I going to get it back? If you're 30 days past due, I'm having to pay somebody to call you to find out when you're going to get that payment in. I'm mailing letters and paying postage. Like, did you know that your payment's past due? Are you going to get that payment in anytime soon? So when you have a payment reported as 30 days past due, that's costing us money as a lender. And if I have a choice of spending $1,000 on one member who's always on time and one person who has a couple of late payments, I'm going to go to the one who's on time because I don't want to waste my money. So any late payments is a big deal. So we want to just, that's the most important thing going forward. If you had a couple of things in the past, okay, don't be late going forward, because your score is based on what you've done in 24 months only, just the past 2 years. And the most recent history is going to impact your score more. So as you go along and that late payment gets older and older, it does stop affecting your score as much. Josh, you have something to add?
Yeah, actually, I was just trying to catch you at the right time, but there was a question about collection accounts. If they fall off your report, can the collection agency still sue or garnish wages?
Yeah. Oh, yeah. So they collect, and then if they still haven't gotten the money in collections, then they can take it further if they want to. So yeah, I mean, the collection company is in charge of collecting it. So they can, if they decide that there's enough money in there and it's worth their time to take it to court, they can. I don't see that happen very often. Usually the collection companies aren't taking the big dollar amounts. And if it's a big dollar amount, it's going to go to, a lawyer. Typically, you're going to see those companies, George and Associates, those are the bigger ones, and they can absolutely take that to court. So yes, sadly, that's money that was owed. You agreed to pay it in the contract. They have the right to attempt to collect it any way that they can. It's a good question. Always do auto payment. I see this comment, no late fee nor late payments. Always do auto payment on your bills. That is a really good way of making sure. And I'm going to go over why that could bite you. So we're going to talk about that. Yes, always make your payments on time. It's the number one most important thing. Understanding that the most recent history is impacting your score more. And so one of the tricks in this category is the minimum payment on my credit card is the balance or $25, whichever is greater. So if I charge $1 and I pay it off, I'm going to have that payment, that green check mark, just as much as if I maxed out a $30,000 credit card and paid it off in full. And so if I have 5 credit cards and I use each one of those for $1 and I pay that off, I've got 5 payments reported to the credit bureaus instead of 1, right? So more payments means the lenders have more information upon which to base a lending decision. So if I can do that with my credit cards, like I have my Netflix gets charged to 1, I pay it off in full. My cell phone goes to another, I pay it off in full. I use the third for gas and groceries, I pay it off in full. And then I have 10 other credit cards. Right before I bought a car in July, I went and used my Care Credit. I got some Band-Aids at Walgreens, paid it off. I used my discount tire. I could get gas at Chevron, got $5, charged it, paid it off. I went to Kohl's, got some socks for my daughters, paid it off. Just $1 is all I got to charge. Get a loaf of bread, a gallon of milk. I got to do that, charge it and pay it off. I had 10 payments reported. That bumped my score quite a bit and made me look really good to the lenders. So that's kind of a little trick in this category in order to build that credit score. So I can use and pay it off. And I do that. I'll go to Costco, charge my $100 in groceries, load up my car, sit down, pull up my bill pay and pay off what I just charged. So I never carry a balance on those credit cards, but I always have payments reported and it's more current so they can see how I'm handling credit today. Okay, so that's a really cool way of building that credit score up a little bit. I have a note in here about the Boost service with Experian. I love that. So this is if Experian and only Experian has this service where if you pay your cell phone bill, you pay Netflix, you pay water, SDG&E, any utilities or streaming services, Disney is part of it too. If you allow Experian to scan your account for those payments, they will put that payment history on the Experian report and it can boost your Experian score based on how many that you have. So that's a really good way of building, people who are brand new, who don't have any credit, they can apply for the Experian boost and hope that the lender is pulling Experian because it only helps Experian. So it's a really good way. I like that boost service. It's free and it's instantaneous. So as soon as they scan your account, they put that on the credit bureau's report and it's instantaneous that you see that score go up. Okay, so it's a really cool service. Yeah, so that is payment history and just keep making those payments on time. Don't be late. This is my favorite category because this is the one where it can get people with those balances. So people hear all the time, people come in like, I was told I should always have balances on my credit card. And it's just no. Because any balance on that credit card is showing that you charged more than you could afford to pay off. That's what that looks like to us as lenders. So any balance at all is costing you points. This is 30% of your credit score is based on overall balances, as well as that balance to limit ratio on each individual credit card. This is where things have changed. With the older FICO models, if you had less than 50% overall, you were fine. With the FICO 8 and FICO 9, they went to every single individual credit card because what we found is people would get those 0% balance transfers and move it all over. And then that would end and they move it all over to another credit card and the balances never went down. So that doesn't show us that you're handling your credit responsibly. It tells us you're moving it around. So they changed this to every individual credit card. So if I'm trying to improve my credit score, here's the trick here. If I've got a $1,000 maxed out credit card and a $500 maxed out credit card, I'm going to get 500 pay down below 150 a lot faster than I'm going to get $1,000 below 300. So I'm going to go after the 500, get it below 150. As soon as it's reported as below 30%, I'm going to get 15 to 20 points back in my credit score, right? So if I can do that with every credit card and then go after the balances, that's going to help my score the quickest, getting each credit card below that 30% balance to limit ratio. Understanding that any balance at all. So I saw a lady with a $10,000 limit charged $10, her score went down 2 points because that there's a new balance on that card that wasn't there before. So we want a zero balance. A zero balance on your credit cards is what we're looking for. So any balance at all will cost you points. Here's the trick in this category that will hurt you if you are just using that automatic payment, because your score is based on the information that gets reported to the credit bureaus. And us as lenders, we report 1 day a month, and every creditor has their own reporting date. I've actually seen a person with 3 Bank of America credit cards that all got reported on different days. So we have the due date, and then we have the reporting date, which is when the balance gets reported. As an example, CalCoast, all of our credit cards are due on the 25th. We report on the 1st. So if you pay your credit card off in full on the 25th and you think you're handling your credit great, and then you go charge something on the 28th, we're going to report that balance on the 1st. Even if you paid it off in full, you're going to have a balance reported and you're going to lose points. And if you keep using that credit card, maybe it's businesses or gas and groceries, you pay it off in full, you could have a balance reported higher than 30% fairly easily. And you're going to lose 15 to 20 points if that balance is higher than 30. Okay, so super important that you know when your creditors report their credit balances, and you'll be able to see that. I'm going to tell you when you can get some, where you can get some free copies. You need to look at that when the balance is updated, when it's reported. So know when it reports, have a zero balance the day before it reports, and don't close the credit card you've had the longest. So this is going into my length of credit history. So you'll hear that all the time. People say, don't close your credit cards, it can hurt your score. It could if you're closing the credit card that you've had the longest. I've had a JCPenney credit card for 25 years. If I close it, the credit bureaus only keep 7 years if there's any negative history, 10 years if there have never been any late payments, and then it drops off the report like it never happened. So if I close my JCPenney credit card, in 10 years, it's going to drop off my credit report. I'm going to lose 35 years of payment history, and I am going to see a loss in my credit score. The other thing is, if I close it, I no longer have that limit available. So when we go back to the balances, it's looking at not only each of the individual ones, but also my overall limit availability. So if I close a credit card and I no longer have that availability, I can't use it to create positive history. I can't keep, use and pay off, and have that balance availability, and I will lose that length of history as well. So understanding that the average length of credit history is affecting your score 15%, but also looking at that oldest credit card. So don't close a credit card you've had the longest, especially. And then understand that anytime you apply and you get a new loan, you are lowering that average length of credit history. So you are going to see your score go down a little bit. And that's from this new credit. This is 10%. And this is every time you apply and your credit report is pulled, that credit bureau keeps a record of that request, and they keep it on there for 2 years. Every hard hit inquiry, that's what it's called, is going to cost that report 3 to 5 points. Okay. So every time you apply, that credit bureau keeps a record. Each one of those is 3 to 5 points. If I've got more than 3 in 6 months or more than 6 hard hits in 12 months, it's an additional almost 10% of my credit score, because that's a red flag for us as the lender. Okay. So I have this note on here going back to the, what if your credit card with the longest history charges you an annual fee and you want to close it to avoid the fee? You have to balance that out. So if I close it, I'm going to lose that history eventually. It's going to take 10 years where it will fall off. So as long as you have some other credit cards to build that history, that's fine, because I don't want annual fees either. So you just kind of have to balance it out. Is it worth that annual fee? Are you getting points out of it? Or is it worth it for you? I would just how much older is it than the other credit card that you have. Go look at your history to see when that is. Okay.
Hey, Caroline.
Yes.
Some questions I want to run by you here real quick that are coming in. One says, I have my husband's medical collections account on my credit. Why is that?
It shouldn't be. It's an individual report. So you can dispute that and say, this is not mine. This is my husband's. It should be reported under his credit bureau. Unless it's a joint account, maybe it was your insurance. And so your insurance didn't pay. And so your insurance is reporting that. And that might be why, but typically it's an individual credit report. That's why married people say, oh, my husband has great credit, I have good credit. That's not true, because it's my own social security number that's being used. It's my own individual report. So if it is his and it's not yours, you can dispute that and it should be off within 30 days.
All right. Also, what determines whether or not a late or missed payment will be reported? Can borrowers communicate with lenders in good faith to ask that a late payment or missed payment not be reported?
Oh, that is my favorite. I love that question. Yes, typically this credit report is a black and white history of how that debt has been handled, right? So typically we don't go back and delete if it is an accurate late payment that's been reported. However, if you get to that lender and stay and talk to them and come up with a new plan, they have the ability to not report that. So stay in communication with your creditors is huge to avoid that hit on the credit. Once it's done, most companies don't remove those late marks. I know California Coast Credit Union, if it's a legitimate 30 days past due, we're not going to remove it. But if you get to us before that and talk with us and we have a new plan in place, we cannot report that. So yeah, absolutely stay in communication with your creditors is huge to avoid that. I love the questions.
All right. A question about Experian Boost. Is CalCoast listed as a financial institution in there?
Well, it's listed, but currently our online platform blocks that third-party request because we have super high security on our current platform. We are going to be changing our platform next year, hopefully. And so that is high on my request list for the new platform, is to get that authorization with Experian, because right now, if you're a member of CalCoast, we can't scan the checking account for that payment history. So we get around that by putting it on another credit card. So if you have SD, Genie, cell phone, Netflix, Disney, charge it to a credit card and then allow Experian to scan the credit card payment history. And then I have a list of people that I'm notifying once our platform gets updated that will put that on there. Good question. Sorry.
All right. And does using PayPal affect your credit score?
If they report it to the credit bureau, so you actually, there's a PayPal credit account, but I have PayPal that is not a credit account. So I use PayPal, it doesn't get reported. So if you have a PayPal credit account, yes, that does get reported typically. But if you're just using PayPal to pay things, then no, it does not.
All right. How does paying off statement balances on credit cards affect credit? Would it show as paid in full or carrying a balance?
It depends on when that creditor reports. So again, with CalCoast, if I pay it off in full on the 25th, but I keep using that credit card and there's going to be a balance reported on the day that CalCoast reports on the 1st, then it's not carrying a balance because you're paying it off in full. You're not going to pay any interest on it, but your credit history is going to show a balance. And since 30% of that credit score is based on balances, it will cost you points if you're not paying it off before. So typically what I recommend is if you have where it pays the previous balance in full automatically, in terms of my credit, I would also go online and make a manual payment to make sure it has a zero balance the day before it reports as well. So you would have to go do it twice. That's why those automatic payments, I do love it that you're never late, but you do have to be aware of the balance on the reporting date. So what I always recommend is get a black Sharpie, pull out that credit card, write down the due date / the reporting date right on the front of the credit card. So every time you pull it out, you see that information so that you know, okay, if I use it today, it reports tomorrow. I don't want to do that. I'll use this other credit card so that I'm not having that balance reported.
That's a really good tip.
Yeah.
And then what if the issuer of a credit card closed your card because you did not use it for a year? Will this affect your credit score?
100%. You no longer can use it to create positive payment history. It's going to fall off your credit report and you no longer have the balance availability. So absolutely. This is why I always recommend keep track of the last time you used that credit card. I have this wonderful spreadsheet that last used, and I'll go in and use all of those credit cards once every 6 months, again, just for $1, $5, something, to keep that payment history current. Because if you aren't using them, they are still sending out statements. They're still monitoring the account. So they're still paying money for you to have that account with them. And if you're not using them, they want to give that $1,000 to somebody else who's going to charge and pay 25.99% interest. So they'll close it due to inactivity and give that $1,000 to somebody else. So yeah, I would say recommend that you use those credit cards at least once every 6 months for something small to keep that payment history current.
All right. What's the perfect FICO score?
850 is the top FICO score that you can get. I've never seen it. In 30 years of doing this, I have never seen an 850 credit score. The top that I've seen, I did see an 834, which was really good, but we're talking, so all these things that we've talked about, length of credit history is 15% of my credit score. I can't have an 850 credit score if I only have had credit for 10 years, right? So that's time. Time is involved in this. And the other part is this variety. So we want to see how you handle car loans and credit cards and mortgages and personal loans and education loans. And as you get older, typically you pay off your mortgage, you pay off your car loan, you pay off your credit cards, and we don't have as much variety of debt going on. So now we're getting to the point where I don't have a lot of variety of history going on. I just have maybe I still have my mortgage and a credit card, but I don't have all those other debts going on. So it's really hard to get to the 850 if all I have is a mortgage and a credit card that I'm using. So that's where, understanding all the things that go into that credit score. If I'm trying to improve my credit, I want to have a car loan. I don't want to pay it off right away. Oh, the other thing, let's go back. I can't go back, but when we talk about new credit, we talk about how it lowers that average score because we have this new loan that shows that until you have 6 payments reported, you're not getting credit for that payment history, right? So anytime I open anything new, I'm going to see a drop in my score because I've lowered my average history, I have a new balance, and I don't have payments helping me yet. Once the 6th payment is reported, now I'm getting credit for the payment history. My score will go up 20 to 30 points. So just be aware, anytime you apply and get a new loan, always have 6 payments reported before you apply for something else. So that's kind of a guideline, is just don't apply for things more than once every 6 months. And then this variety of debt. I want to see how you handle a car loan. Because if all I have is a credit card, my minimum balance is payment is $25, how do I know you can handle a $300 minimum payment, right? And if all you have is a car loan, how do I know that you can handle unsecured? Because if you don't pay your car loan, you lose the car. There's a huge consequence. If I buy tickets to Tahiti with my credit card, I come back and I don't pay it, I can't take the trip back. So we want to see how you handle bigger payments and smaller payments and unsecured and secure. We want to see all that history, right? Okay. Oh, and then going back to the variety of debt, we also want to make sure you're borrowing from reputable lenders. So that is, if you go to those places on the corner that say no credit, bad credit, no problem, they're going to charge you 20% for a car because you're a higher risk. And if you're a higher risk, that's what your credit score is all about. So if you have high risk lenders on your credit report, you're not going to get as many points. So we always recommend, that's the only time that I would tell people close your oldest credit card if it's with like a One Main Financial, that's a high risk company. So we'll get you a better credit card and close that one so that your long-term credit is going to benefit from having reputable lenders on the credit. So yeah, lots of stuff going on. I know there's a lot of information. We're going to have some handouts that I'll send out to everybody who registered for this. If you want to email me at the end, I'll give you my email address so that you can look at and get that information, all those handouts about how this FICO score is calculated. You'll have this website, this PowerPoint with all the notes on here. So one last test. What doesn't impact your credit score? Annual income, length of credit history, addresses, all the above, or A and C. So what doesn't impact your credit score? Here's a good question on this one. What doesn't impact your credit score? Annual income, length of history, addresses, all the above, and We've got a couple of answers in there. I did a trick one on this one because addresses doesn't impact your credit score. We talked about that, but annual income doesn't either. Annual income, so all that's on that credit report that's impacting your score is 35% payment history, 30% balances, 15% length of credit history, 10% increase in new credit, and 10% is that variety of debt. So your annual income does not impact the score. It does impact the lending decision. So that's two different things that we're looking at as lenders, but the score, we don't care how much income you have. So you could have $800 a month and still have a good credit score because you've created positive payment history. So that's a great one. Okay, so there's this website, annualcreditreport.com. It's the only federally backed website where you get one free copy of your credit report. It's great, but I don't use it because we have these two options, Credit Karma and Experian. So the three main credit bureaus that you want to keep track of is Equifax, TransUnion, and Experian. Credit Karma gives you both Equifax and TransUnion, and they update it every single day. Great resource. Understanding it's not the FICO score, but it does show you how your score is going. So it's a great way to monitor in real time. Experian, I love Experian. You get one free report. Right now it's updating every 14 days, so not as often as Credit Karma does, but it does give you a FICO score. It's using an older model. They're giving you the FICO Model 8, but it is a FICO score. So it's going to be closer to what lenders are seeing when you actually apply for something. So apply, sign up for both of those. They're completely free. If they're asking you for a credit card, you're in the wrong place, go back, because these are completely free resources and you can get this real-time information on what's going on with the credit reports. They're really great resources. We're running out of time. I always run out of time with this. If you're looking at just starting off with credit and we don't have information for a lender to base that information off, these are some ways that we can start off with credit. If you're just filed bankruptcy or trying to rebuild, or you're 18, 19, don't have a lot of credit, you can become authorized user on somebody else's credit card as long as it's got good payment history, been around for a while, has a zero balance, because anything that's showing up on negative on that is also going to show up on yours if you become an authorized user. So I can add my child as an authorized user. I can apply for the Experian Boost. We talked about how that helps. If I don't have anyone who I can apply jointly with, or I can become an authorized user, I don't have any bills that I'm paying right now, you can do what's called a share secured installment loan. You deposit $300 in a savings account. The credit union holds it as collateral. We'll do a $300 one-year loan. Payments about $20, and that history will get reported to the credit bureaus. Talk to your credit report, talk to your credit union if you want to get that started. You can have joint with somebody who has good credit. And then once you've got payment history, apply for your own. So that's kind of how you build that up. Pay your bills on time every single month. Don't ever charge more than 30%. That way you never have a balance higher than 30%. Use your credit cards at least once every 6 months to keep that payment history current. Again, highly recommend that you have a zero balance the day before it reports. So know when they report. Don't close out the credit card you've had the longest. And that last one, spend less than you make. This is the part where people are using credit cards to pay for just regular purchases, right? I need to buy tires. I don't have the money. I go to Discount Tire credit card. I need to get a new computer because I know it's going to break and I don't have the money for it. I go to Best Buy and I charge it. Set up an auto repair savings. Put money aside every paycheck so that when you have to buy tires in 3 years, you're not relying on credit cards. Same thing for home expenses. I have to replace the computer, my cell phone, my mattress. Set money aside every paycheck so that you are not having to rely on credit cards and you don't carry those balances. That's my biggest, is to stay out of debt, to stop using the credit cards, make sure you save for those things. All right. Made it to the end with 2 minutes to spare. Powered by Enrich, there's a really great resource here, calcoscu.enrich.org. Lots of great information on credit and budgeting. Also, like Josh said, go to our YouTube page. A lot of this will be on here. There's a lot of other webinars that we've done that are posted on there. Okay, so there were some other questions.
Yes. So first question, can you dispute a collection account that bought a medical bill? So I guess a medical bill that was bought by a collection agency.
Well, if it's legitimately yours, so that's the part where when you're filing a dispute, you are swearing under penalty of perjury that it is not your debt. So if it is legitimately your debt and you know that it's your debt, then no, you can't really dispute that. You can contact them. Typically, one of the things that I recommend when there's a collection on my credit report is I'm going to write them a letter first. I'm going to write a letter requesting proof that the debt belongs to me. Because if they don't respond to you within 30 days, then by law, they're not allowed to report it to the credit bureaus. So for me, that's always the first step with any collection account that you haven't spoken with. Write them a letter requesting proof that the debt is there. I have a template, or you can just go search for a template for request validation of debt, wait 30 days, and then we can dispute that if you haven't gotten a response. I always write a letter and request that proof because that gives you an opportunity to get it off the report. But if it's legitimately yours, you can't really dispute anything because it is upon penalty of perjury. So if it's legitimately yours, you can't dispute it.
All right. Does paying cash for gas, food, etc., is it reported by the merchant? I think the answer is no, right? If you pay
No,
cash,
it's money that you borrowed or money that you owed. That is typically what's being reported to the credit bureaus. So when you're using your debit card, you're just using your own cash for it. You're not borrowing anything. So that's why I love my cash rewards credit cards. I get 3% back for gas. So I'll go to Costco, use that. And then while I'm still sitting in my car, pull up my bill, pay off what I just charged. I'm getting back about $50 a month for using my $600 a year that my credit card companies are paying me. And I'm not paying any annual fees and I'm not paying any interest because I pay it off right away. So that's how you want to use the credit cards, is I use it and pay it off in full, have a zero balance the day before it reports. That's the best thing that you could do.
All right. How many points can you lose every time you apply for a rental?
It depends. Well, okay. So when they apply, they're pulling a credit report. So if you apply at CalCoast, we pull the Experian report. The Experian is going to keep a record and your Experian score is going to go down 3 to 5 points. If they pull TransUnion, then TransUnion is going to be impacted and Experian's not. So it depends on which credit report is being pulled. And every single report is going to cost you, every pull is going to cost you 3 to 5 points. And if you have more than 3 hard hits on that report in 6 months, it is an additional 10 points, 10%. So you want to know which credit bureau is being used, and you want to see how many are on the credit report already by going to those free websites and knowing how many requests you've had. I just saw one that had like 29 inquiries. I'm like, stop applying for things because you're not going to get approved right now. And all of these hard hits are just looking worse and worse because one, either you got approved for all those cards and now we're like, oh, that's a lot of new debt to have in a short period of time. Let's not give you anything else. Or you got denied for all those things. And now I want to see what's going on with the application. Why are you not getting approved for these? Either the debt to income is too high, you've been at your job for 2 months. For us, you have to be there at 6 months at least before you apply. There's a lot of other things that go into a lending decision besides the credit score. So a lot of hard hits in a short period of time is going to impact you.
All right. I noticed Credit Karma shows an inquiry on your credit report. Does that matter?
No, those are soft hits. Sorry. See, I always run out of time. Soft hits are when you pull your own credit, it doesn't impact your score. That's a soft hit. So CalCoast Credit Union, like 3 to 4 times a year, we'll do a soft hit. We just get your credit score. We're not pulling the whole report. So you'll see that on your credit on Experian, there's a soft hit. Those ones don't impact you. You can look at your own score 30 times a day. It doesn't impact you. So those are fine. You'll see it broken down on the credit report. What's a hard hit? What's a soft hit? And they'll say these ones impact your score. These ones don't. That's a soft hit.
All right. How often can a free credit report be obtained?
Well, you get the update on Credit Karma every single day. So those I would use those. I would use Credit Karma and Experian. Experian updates every 14 days, completely free. You can pull one for free. Those free sites do it automatically for you. You can pay for one. If you've already pulled your free copy and you want to get an update on Experian today and it doesn't update for 10 days, you can always pay for it. It's like $8 to $10 to get a copy for it. But I would just rely on the Credit Karma and Experian. It updates every 14 days for Experian. I think that's enough time.
Okay, and has anyone ever challenged and litigated the right of credit bureaus to collect data, compile reports, and create scores on people? That's a deep question. I'm
That
sure
is, and I
someone
did not check into the litigation against them. But this is a tool that lenders are using to protect the money that we have. So as a credit union, we pool our money together. You're a member, you become a member of an organization. It's my money and your money. We pool it together and we loan it out to each other to help each other out. So we want to make sure we're making good lending decisions and we're not giving to somebody who's not going to pay us back, right? That's the whole point of this, is how have you handled your debts in the past? And we're making those decisions based on that information. So this is, if we say someone gets a BMW and their minimum payment is $1,000 and it doesn't get reported to the credit bureaus, and we're making a decision not knowing you have that minimum payment, and then you lose your job and you let all your unsecured debt go. Maybe I gave you a $20,000 line of credit because I didn't know you had $1,000 going out the door. This helps us protect our income, the money that we have. It helps protect us as lenders. So I'm sure they've been sued. I'm sure people don't like this information being shared with lenders. I'm sure they've been sued, but it's very beneficial to us, and you have the whole weight of the credit and banking financial institutions back behind it. So I don't think they're going to win.
All right.
Good question.
Yeah, it is. Here's kind of a good question too. I just paid off my house and car. I only have 2 credit cards and 1 personal loan. Planning to pay off the cards and personal loan in 6 months so I can be debt free. Should I pay off the cards and loan but keep them open?
Definitely keep the credit cards open. I personally recommend that people have 3 credit cards, because when you pay off a mortgage, it's going to fall off the credit report. You pay off the personal loan, you pay off the car loan, it's going to fall off, and you're going to see your score start to go down because you no longer have a payment being reported, 35% of my score, in that variety of debt, which is 10%. So anytime you pay off an installment loan, it's kind of one of those catch-22s. You think you're doing so awesome, and then your score starts to go down, and you're like, what is going on? That's why we no longer, because if you think about this, think about where you guys were 3 years ago financially, right? Most people are in a very different place. So we as lenders don't want to make lending decisions based on what you did 3 years ago. So you pay off a car loan, pay off your mortgage, pay off installment loan, and you apply for another loan 3 years later. Maybe you retired, maybe you got married, maybe you got divorced, maybe you got kids, maybe you changed jobs. A lot changes in 3 years. So we're not going to make a decision based on how you handled that debt 3 years ago. I'm going to see it because it stays on there for 10 years. But I'm more concerned about what you did yesterday, what you did last month, because that gives me a better picture of your current credit risk. So mortgage companies tend to want to see at least 3 trade lines with a year's worth of payment history. So I would recommend getting another credit card while you still have the mortgage and the car loan payments. And then make sure that you're using those 3 credit cards regularly to keep that payment history current and keep that credit score, knowing paying off those car loans and the mortgage loan is going to hurt the score. Sorry. Great job.
All right. I think we got through all the questions we've got. Oh, wait. Fatima says thank you. Thank you, Fatima.
Thank you.
Terlyn, do you have your contact info on the next slide?
I do.
All right, let's go to that one. And I put the link in the chat as well to schedule an appointment with Terlyn and her team. So you can contact us by phone, email, you can come into a branch, call our call center, go on the website, whatever works for you, and schedule some time with Terlyn. She can work with you one-on-one as a member. It's completely free. And so just let us know and we'll get you scheduled in.
There's a couple of great questions there, actually. So Monique put in there, how do we find out when our credit card is reporting? So if you pull up Credit Karma, right underneath the name of the lender, it's going to tell you when that balance was updated. It'll say, June 1st, 2021. So the 1st is when that lender reports. On Credit Karma, it'll be in the overall, like deeper into the information, it'll say balance updated or balance as of. So that's really important to notate when that credit card reports. Thank you for asking that, Monique. So many great questions, right? I love credit because everybody had, this is always the one where I get the most questions. And so if you have questions or you want to do the one-on-one reviews, this is something that CalCoast does as a free benefit for our members. If you want to sit down and get some ideas of how to improve that credit score, Jevin or I can meet with you one-on-one and review your credit reports and give you step-by-step instructions. It's a free service that we do. It's one of the ways we help, our members. We make you stronger, that makes us stronger. So it's a good thing.
John had another great question. Is there a way to request that credit reports from all three agencies be automatically generated and sent to you on an annual basis? I don't think so, right?
No, not automatically. You would go into the annual credit report. I just usually, like the beginning of the year, that's a really good time for kind of reviewing everything. Go to annual credit report, and if you want to get it, from that source and get the one free copy from them. But again, what you see on Credit Karma and Experian are the actual credit reports. So I don't use annual anymore. I haven't gone on there and I don't know how long, because I'm getting the information from Credit Karma and Experian. I highly recommend you sign up for those.
Audrey, thank you. I love my CalCoast Credit Union, she says, with exclamation points.
Yay!
Well, don't forget to refer your friends and family. You get money for it. $50 for you, $50 for them. Don't forget. And then we'll take one last question here because we're running out of time. Do I need more credit card payments to increase my score? I have a car payment and mortgage payment and student loans only.
If you don't have any credit cards, absolutely 100%. People who tell you don't have to have credit cards are lying, because that length of credit history is going to be established by the credit cards, because all those other fixed loans are going to fall off once you pay them off. So I always recommend 3 credit cards. Always have 3 credit cards, always, because I can pay off everything and still have 3 payments being reported, still use and pay off in full. So yes, if you don't have a credit card, you don't have any balance to limit availability, nothing to show lenders how you handle unsecured debt, having a credit card is a really good way to establish that payment history every single month. Again, just pay off. We have Disney, go to one. Netflix, go to another, cell phone to another, and just you're paying those off in full every single month. So that is going to build that 3, 4 pay. The more payments you have, the better we as lenders can see how you're handling your debt. So it's better to have more payments than just one, and having unsecured debt is really important.
All right. Suzette says she's going to be contacting you, just FYI.
Yay!
So is Maria. Looks like she's setting up an appointment too. You're going to be very busy.
I love it. Happy New Year.
John, thank you for the comment. Very informative and engaging presentation. We appreciate it. Thank you everyone for joining us today. And for those of you on Facebook Live, I see you. Thank you for joining us there as well. That's kind of a new thing we're doing. So we're going to be on Zoom, but also we're going to try and do Facebook Live here on out as well. So be on the lookout for those. Follow us on Facebook if you don't already, and on Instagram. It's just at CalCoastCU. And Tara Lynn, any last thoughts?
Come see me. Again, beginning of the year is a great time to kind of refresh and look at everything. And we do the financial fitness, the budgeting, and all that fun stuff too. So, if you aren't a member of CalCoast, come join us. We have a lot of great free services. I love credit. It's a great game. We've gotten a lot of tools now that you can get to that higher level and just give you step by step. So happy to meet with you, and thank you so much for joining us and learning information about credit. I hope you got some good information.
Thank you so much, everyone. Tara Lynn, thank you for all the great info and answering the plethora of questions that we have. And just want to say happy holidays to everyone, and be on the lookout for emails to hit your inbox, or just check us out on social media. We'll have a full lineup of webinars and potentially maybe even in-person workshops again next year. Hopefully those will come eventually again, but for now we're just sticking with the webinars. But keep an eye out for those. Until then, happy holidays, and we'll see you next time.
Hi, Betty.